Support and resistance is a tricky subject. On the face of it, it looks simple because you're just simply drawing a line where you see fit on the chart. But sometimes those lines, they do not really hold the market. If you really think about it, if anyone can draw a line on the charts, should they be calling themselves a trader? Probably not. So in this video, I'm going to talk about three main things. The first one is being able to locate actual support and resistance. Second one, being able to identify higher probability support and resistance area. And the third one being how to actually trade them without having any drawdown. So let's get started. So right here, I have the Euro USD chart on the 5-minute time frame. Now we are looking at price going up. And if you're trying to spot S&Rs in the market, what people generally do is they will just look at where the highs and the lows are. So if we really pay attention here, we can really see price going up, down, and then further up. Now, again, the logical thing to do here is just to mark out our S&Rs at areas like this, the high end of this swing high, and then perhaps marking out an area like this. Okay, say for example, if we have marked those areas out and price are pulling back and we are expecting some sort of reaction at those levels, trying to pick up, in this case, a buy. So let's see what's actually going to happen. So we have price pulling back slightly and then we are reaching the S&R area right around there. Okay, let's say we play one more bar forward and we are at S&R. Ideally, based on what we have drawn, you would expect a reaction towards the upside, looking something like this, trying to take price from this low to the next higher high. However, things just crash very quickly. And then now you're thinking, okay, if the first support and resistance doesn't work, maybe it's going to use the second one below the market. Perhaps it's going to use this one. So if we do the same thing here, let's see what's going to happen. Again, crashing lower. Now we can keep doing this over and over and over again until we finally find the right support, and then we are able to make some money. But by the time we do that, the money we make is only going to cover whatever losses that have been taken from the wrong S&R areas. Alright, but what about this level right here? Let's say if we put our profit marker right there, and let's do this. And let's take it up to the recent high. And let's play this forward just to see how well does this third support and resistance area actually performs. So market is really taking its sweet time here, but I think we reach profit right there. Now the question you're probably asking yourself is how come this level worked, but this one here and this one here, if we were to take the buys, they did not perform? The answer is pretty simple. If we just simply zoom out a little bit to the left, we are able to see we are coming out of this huge range. Okay, and we are just simply reacting to the top of the range. This brings me to the first and most important point. How do you actually identify a strong support and resistance area? There's a difference between a hold and an actual support equals resistance area. Let me explain. So a hold is something like this, where price is just taking a pit stop before moving further up. An actual strong support equals resistance area, it's gonna look something like this, where price has problem moving up for multiple times before actually making a breach towards the upside. Now the key difference here is, at this price point, a lot of traders, they are looking to bring price higher, but they are unable to because sellers are sitting right at this price point, pushing price down. That becomes an area where everyone is gonna remember. And when it's breached above, that just simply amplifies how strong that area is emotionally for all traders. Doesn't matter if they're institutional traders, hedge funds, or retail traders. Just because it was so important before and it got breached just like that, as price pulls back, people are going to remember this price. And if everyone's looking at that same area trying to get in, this is going to definitely push price higher. Versus something like this, no one's really going to pay attention to small little holes like this in the market, right? That's why when you see price coming down, sometimes they don't really react. They have some small reaction, but afterwards, price is going to pull back deeper until it finds a very strong, we call it memory area in the market. If they are able to find areas like that, the odds of it responding is going to be much bigger, like this. Okay, exactly like what we were looking at on Euro USD right around here. Areas like this tends to not perform or not hold the market, same thing as areas like this. But if you compare it with areas like this, that's definitely gonna hold the market, because this area here, and here, they're all memory spots. Those are areas where sellers were hitting it hard before. Now let's have a look at another example which is pretty similar. Now we have this move up towards the upside, and what we can clearly see here is, move up, a hold, and a continuous move towards the upside. Now what happens if you draw an S&R right here, hoping to trade that level? Let's say if price does pull back into that area. Okay, we get in on our buy, stop loss below, and then let's say we take it to the recent high. What's gonna happen here? Let's play it forward. We did have some sort of small reaction to the upper side, held a little bit, and then straight to stop loss. Okay, but what happens here? This is the classical market is just finding my stop loss, take my stop loss, and then performing afterwards. But that's not really the case here, is it? Because as what we've been discussing earlier, this S&R isn't really that strong in the market, okay? Versus areas like this, where we have huge response from this area before, forming a strong memory spot. And because that's such a strong area, as soon as price touch that zone, it's gonna react and then it's gonna go. So this right here serves as a much more powerful support and resistance area. So having that said, when we're talking about actual strong support and resistance that's caused by strong memory areas, those memory areas, they generally possess two things, okay? It has to have a strong reaction, and it has to have multiple reactions of that area. And when I mean multiple, it just means 2 to 3 times. You do not need more than that, okay? So for example, we need to see price having some type of strong reaction from that price, and then at least 2 to 3 times before breaking up. Because if it's just once like that, it may not be a strong enough memory area to make that a strong support and resistance area. If it has multiple reaction, people are gonna remember that. And the stronger that reaction, more people are gonna remember it. Because think about it, if it's small and tiny like this, yes, we reacted multiple times to this same area, but if price does come back, no one's gonna take that small little hole seriously, okay? So if we look at this next example right here on silver, this time looking at this on the daily time frame. Again, we have an S&R right here. We have another S&R right here. Hopefully by now you should be able to understand this is the one to focus on and not this one, okay? And if we look at this second one right here, we have 1 reaction, 2 reaction, 3 and 4 reaction. And all of these reactions are not small, right? They both travel a big distance. Remember, we are looking at this on the daily time frame, okay? This is a significant move on the daily time frame. And because of that, the chances of it reacting off here versus off this area is much higher. And if I play this forward, you can clearly see we come down, tested that area, right? Initially have strong seller momentum coming down, followed by a reaction back up, and then we retest that area one more time right here, and then we actually made our way to higher highs. I'm gonna talk about the exact entry and how you would get into this trade right here in just a second. But those are the 2 main things to focus on when it comes to identifying strong support equals resistance area. A strong reaction of those memory area and multiple reaction of those same memory area. Okay, so moving on to the next step. You want to scroll down, look for the red button below this video that says subscribe, and then subscribe if you are not subscribed already, and hit the like button if you're enjoying this video so much. That's really gonna help support this channel. Leave a comment in the comment section about how you're enjoying this video and what you want to see next in the upcoming video. Okay, now but seriously, let's move on to the next step here. The next step here would be understanding that not all strong memory support and resistance area are going to react. Because if I show you something like this, on the USD yen chart, 1 hour time frame, we actually do have a strong S&R area, right? We have multiple reaction of that area and we have big reaction of that area. But see what happens next. If we were to look for a buy on a pullback, let's say this move right here, and let's say if it got in on a buy right there, what's gonna happen to this buy? We immediately get a stop out, albeit a strong support and resistance area. going to show you another one. I want you to start thinking about why SNRs like this do not work. In this one here, we have the dollar Swiss on the 1 hour time frame, and we have this SNR right here. Price is pulling back, and let's say if we're looking for a short position right here with our target right around there, what's gonna happen? Let's play this forward. We have a short little reaction to the downside, but we immediately got stopped out afterwards. If you're able to guess why that's the case, leave your answer in the comment section below. But here's the reason. The reason why this does not work is if I scroll out just a little bit, we are able to see that we are pretty much in the middle of a range. And because we're in a range, there's constantly buyers and sellers. They're both fighting for prices. So it gets very, very unpredictable. For example, if you look at this area right here, if I were to draw out a zone right here, okay, and if I zoom in right there, that looks like a strong memory spot, doesn't it? However, when price actually pulls back into it, we do not actually have a move away. If our trade was set up like this, price just continued to collapse to the downside, leaving us with nothing but another disappointment. Okay, all because we are not in a trending state, we are in a range, and things can really go sideways for a very, very long time, making things very, very hard to predict. If I were to show you this further into the future, you would see exactly what I mean. Now we have this low here and this low here, and we have a breach to the downside, right? Now this is again a strong memory area because we have a violent move away, and it moved away multiple times, once here, second time here. But when we actually pulled back into it, did not hold there, and price continued to move up further. And again, one more time, we have another area right there, and this time we have almost 3 response from the area, once, twice, 3 times before making a breach to the upside. Now, we actually pull back into that area and see what happens next. Just continue to collapse. Okay, so this is where it's super important to understand that not all SNRs are strong support and resistance. The best support and resistance that has a higher probability of responding in the right direction are generally the ones that are in a trending market. As well as this EURUSD first example we were looking at, where things are really turning around going into an uptrend. So trend is super important. All right, moving on to the last piece. I want to talk to you about how do you actually get in on these support and resistance trade. I want to show you this trade that just happened 1 hour ago, which has all the elements we were looking for. And for that, we will take a look at US dollar CAD. Now, US dollar CAD is pretty much in a downtrend. So we got that covered. Okay, we have a trend backing us up. And the second thing we want to look for is how strong is the support and resistance area? Is that a good memory area? Here we have strong reaction once and twice. Okay, we got that covered. It's not only a strong memory area, it has a violent move away, and it moved away multiple times. So that's good. All right, so once we have moved below and we have accepted below it, as price is pulling back, this is what I generally do. We look for the pullback and we want to make sure the pullback slows down. I'm seeing a very strong move towards the upside, and I want to see buyers actually slow down based on how the candlesticks are looking. Right here, we have one strong move towards the upside and then followed by the second move. Now, if the second move doesn't make a higher high and decides to start turning around and show weakness, that's where things are going to get interesting. Okay, so seeing how strong the seller responded again, and the third time the buyers actually attempted, it moved up in 2 pieces versus the previous time it took 1 bar to go up. That's telling me there is weakness in the market. Once I see that, what I'm gonna do is I'm gonna go down to 1 time frame lower and I'm gonna look for my entry. What I'm looking at here is the detail from the buyers and the sellers. Okay, my goal here is to make sure that the momentum shift from the buy side to the sell side after reacting off the support and resistance area. So this is the S&R that we were looking at on the higher time frame, right? We have a strong reaction the first time, second reaction strong, but look at the seller. They're still looking pretty weak versus what the buyers are trying to do. But the third time here, buyers took 1 bar, 2, 3, 4, 5, 6, 7 bars to go up, reaching that spot, and sellers just took it down in a couple of candles. And that's telling me the buyers are pretty much gone and the sellers are now back ready to rumble. So now that I know my sellers are ready to rumble, what I'm gonna do is look for a sell right here, right? Stop loss at the S&R because I know we shouldn't be coming back there again. based on how strong the last reaction was, and I'm gonna take it down just to the recent low for a simple 1.3R trade. Now if I play this forward, it's gonna look something like this. Came back up, tested a little bit more, right? Slight drawdown, not really going any further up now. And then there we go, holding, trying to breach lower here. This is when the New York market opened and boom, there we go, reaching target. This is a very simple process on how to first identify what's a strong support and resistance area, knowing exactly the support and resistance that has a higher probability of reacting, and understanding exactly how you would want to get in. Now, if you like this video and have at least enjoyed a thing or two from this video, just do me a favor, click the like button, subscribe if you haven't already, leave us a comment below, and I'll see you on the next one. Cheers, bye for now.